All right, welcome back to Trades and Gains. I'm your host, Max Pitts, and let's talk about the thing Washington does best, almost shutting the government down and then acting shocked when people notice. Because here we go again. It's kind of like that GTA meme. I'll insert it here. Ah, shit. Here we go again. The clock's ticking. We have deadlines looming. We have lawmakers arguing. And markets, well, they're barely blinking. I mean, look at our SPY chart for today. This thing's been trading in a range that's been making my butt itch at this point. All right. So what we're going to do today, and if you're wondering why Wall Street looks calm while cable news is screaming crisis, don't worry. That's actually the most American thing happening right now. Tonight, we're breaking down, or today in this case, we're going to go ahead and break down what this shutdown actually means, why markets usually shrug this kind of stuff off, and when it does start to matter, and who wins, who loses, and who just keeps trading memes like, well, nothing is happening. There's no fear porn here. There's no politics cosplay, just data, history, and the reality of the situation that we're currently in. So here's the clean version, because Congress, well, they never gave us one. If lawmakers don't pass new spending legislation by 12:01 a.m. on January 31st, parts of the federal government lose funding. Now, we're not saying the whole government loses funding, not Armageddon, but this would be a partial shutdown. Now, the fight, Homeland Security funding, specifically immigration enforcement, ICE oversight, fallout from a deadly shooting in Minnesota, and whether DHS funding should be separated from the rest of the government. The House has already passed a big funding bill. The Senate is stuck in procedural quicksand, and there is a bipartisan framework currently. Most agencies funded through September, and DHS funded temporarily while lawmakers go ahead, get in the boxing ring, and fist each other. But, and this is the important part that you need to listen to, procedural holds, internal objections, and House Senate politics mean a shutdown is still very much on the table. This isn't ideological chaos. This is process failure mixed with politics. So let's clear up the biggest myth right now that most people have about this government shutdown, because, you know, most people are probably confused. A shutdown does not mean that the military stops, airports close, the lights go out, or Washington collapses into a Mad Max movie. That's not the case whatsoever. This is what actually will happen, okay? Now, these are what keeps running: national security, air traffic control, law enforcement, border operations, and anything labeled essential. The things that will slow down or pause, we're talking about some federal agencies without funding, non-essential government workers get furloughed, contractors wait longer to get paid, regulatory approvals slow down, and yes, economic data releases, and this is the key word, can be delayed. That doesn't mean they will be delayed, but they can be delayed, okay? And that last part matters, because when the government shuts down, sometimes jobs reports, inflation data, and business surveys don't come out on time. And the Fed, well, it hates flying blind, because those are the things it needs to make decisions on rate cuts. Markets, they don't freak out because of shutdowns. They get jumpy when the data starts to disappear. So if we're going to see data disappear, expect the markets to act accordingly, and we could see some lower lows at this point. Like on SPY, I wouldn't be shocked if we saw 687 today. Just throwing that out there. Now let's go ahead and talk some numbers, because, well, vibes lie, but at the end of the day, the data never does. And that's, let's be honest, why you're a part of Trades and Gains or watching this video, because, you know, I don't have a bias. I just give you guys the facts. Love it or hate it, I'm usually not wrong. Across modern US history, The S&P 500 has been up during shutdowns, and that's 57% of the time. The average return during shutdowns is between 0.3 to 0.4%. 1 year after shutdown ends, the S&P is higher 85 to 86% of the time, and the average 12-month gain is 12 to 13%. So let's go ahead and name some names. All right. The 2013 shutdown was 16 days. The S&P 500 was up 3% during the shutdown. Markets basically said, call us when something real happens, okay? Because we're not falling for your BS. 2018 to 2019 shutdown was 35 days, which was the longest ever. The S&P gained roughly 9 to 10%. Actually, the longest ever was our most recent one, but the S&P gained roughly 9 to 10% during the shutdown window, then ripped over 25% the following year. All right. But, and this matters, it's not guaranteed. Some shutdowns coincided with broader risk-off environments, occurred during tightening cycles, or overlapped with earnings recessions. The key takeaway here, shutdowns don't cause market crashes, okay? They sometimes just coexist with them. It's all about timing and what's going on the macro side and with just the overall market. And that's a big difference. Now, why does Wall Street shrug? And why isn't the market panicking the way people think it would? Well, because markets care about 4 things, okay? 4. Dylan, and Dylan. No, I'm just kidding. Earnings, interest rates, liquidity, and growth. Shutdowns don't directly hit any of those, at least not in the way that would give a negative effect. What they do affect is sentiment, headlines, short-term volatility, and data clarity. And that's it. Every major investment firm says the same thing. Shutdowns raise noise, but not risk. Unless 3 things. This is the only time it will affect it. They last a long time, because like most of us can't last a long time, if you know what I mean, right? Fist me, brother. They disrupt treasury markets, or they force the Fed to operate without data for too long. That's when Wall Street stops yawning. Now, here's where this whole narrative gets interesting. We're already in a Fed pause, inflation way above target, a labor market cooling but not cracking, and a market obsessed with timing the next cut. A shutdown is going to go ahead and complicate that. Not because it changes the economy, but it delays the scorecard, okay? If key reports get pushed, CPI, jobs, and consumer confidence, well, the Fed loses volatility and they're basically flying a plane without wings and just hoping and praying at that point. It's basically like they're flying a Boeing jet. No, I'm just kidding. And when the Fed loses visibility, it doesn't get dovish. It goes ahead and just gets cautious. Shutdown noise can indirectly delay rate cuts, even if fundamentals haven't necessarily changed. Now let's go ahead and talk about positioning. Potential winners of this would be large cap stocks. They're less dependent on government contracts at the end of the day. Defensive sectors, healthcare and utilities, gold and metals, these are headline hedges, and mega cap tech, because earnings are greater than politics. Let's look at Tesla today. I mean, Tesla was the play of the day. We like to say POD. We had a nice little run up from about 422 all the way up to 439. So a nice $17 move. Just an example, right? Now, the potential losers here, small caps, because guess what? Small caps are tied to what? Federal spending. Government contractors obviously will take a hit. Regional economies heavy in federal employment and short-term sentiment trades. Consumers, well, short shutdown, they barely notice. A long shutdown, federal workers feel it and spending slows locally. On the investor side, well, they overreact and usually lose, or if you stay disciplined, you historically win. This is also why I mainly try to get us into long-term swings, because I don't want people to lose, all right? So here's the bottom line. A government shutdown is politically embarrassing, operationally annoying, and emotionally exhausting. But historically, it's not a market killer, not a buying signal by itself, and not something to YOLO against. Marquee. Markets care about rates, earnings, and liquidity, not congressional tantrums. If this shutdown stays short, history says markets move on. If it drags, delays data, and tangles with Fed policy, then we pay closer attention. Until then, this is Washington noise at the end of the day, not Wall Street reality. And as always, trade the data and don't trade the drama. If you like this video, make sure you go ahead, like, comment, and subscribe at our YouTube channel. Leave your hottest take down below, or tell me that I'm just blowing smoke up your butt. Because at the end of the day, these are just the facts. This is no bias. I have no horse in this race. I'm not a part of the government. So do with that as you will. Anyways, this has been Max Pitts, Trades and Gains, powered by Investor Central Club, which we're looking at over here. Use the code SUPERMAX20 for 20% off your first month at investorcentralclub.com. And I hope to see you guys over in the Discord. If not, hope to see you guys on the stream sometime. Have a great rest of your Friday, and I'll catch you guys later.